Hi everybody, this is a overview of chapter 1, homework problems number 2 and number 3, and it's actually an approach or an overview of how you can approach the material in general in this course, okay? So the first thing we want to do is I want to encourage you all, as you open up one of these questions, is just focus on this upfront piece first. Do not jump to here, okay? Let's actively read this piece first. The first thing we want to look at is that Sharon Lee is the proprietor and she opened a law office, okay, on July 1. So let's first take note of the dates. July 1 is when she opens the office, okay? On July 31st, okay, we're told that the balance sheet showed cash of $5,500. So what that means is that on July 31, the amounts in her business were what's stated up here in the first sentence, okay? So these are the amounts in the business at July 31, all right? So let's kind of pick apart or start to analyze what is happening or what is in the business as of July 31, okay? Because that's what our first task is here. So what we're going to do is we're going to look at the different accounts. So let's underline each account and then circle the amount that relates to the account. This is where it gets very detail oriented and you want to actively read. Okay? This is where taking notes can be helpful. So I'm going to underline cash and then circle the cash amount. Cash of $5,500. Underline accounts receivable, circle $1,800. Underline supplies, circle $500. Underline equipment, $6,200. Accounts payable, $4,200. Owner's capital, $9,800. Now, for you, maybe perhaps at home, you want to simply write out on a notepad, cash, $5,500. Accounts receivable, $1,800, and so on and so forth. Maybe that's what makes sense for you. Do what makes sense, but what I want you to do is untangle this sentence, and I want you to layer it into a logical format, okay? I'm simply underlining and circling, mostly because it's a V's to kind of show you all watching this, the process. Because here's what we want to do next. What we want to do next is we want to understand, once we have the accounts listed, and we have 6 accounts, by the way, cash, accounts receivable, supplies, equipment, accounts payable, and owner's capital. We have 6 accounts on July 31st, all right? What we want to do is layer these accounts into the accounting formula. That's the first step. So let's look at what's needed for that. And I'm gonna kind of just scroll down here and open up a blank piece of paper and write out my accounting formula. Assets equals liabilities plus owner's equity. I want you guys doing this anytime you open up a problem for this course. I want you having this at the top of your page. You're gonna memorize it simply by doing this exercise of writing it out every time you need it. Because what we need to do next is we need to take those 6 accounts and plug them into either equity, liabilities, or assets, okay? Now, I'm going to say off the bat, let me go ahead and put in cash. Many of you have repeatedly said in class that cash is an asset, and that's correct, okay? So let's just put that in there just as an example of what we want to do next, this next piece, okay? Now, for what I want to do with this next piece is take you back to Blackboard. And I mentioned we're going to need Blackboard here. And let me point out what we're going to need here. And I'm just scrolling here just to get to the right page. What we're going to want to do is we're going to want to go into the resources section of Blackboard. Okay, so click on this link. And then go to what's called the sample chart of accounts. Okay? If you can't see the picture there, if it's just a gray line, you're going to want to click on this button here because that will expand the image. This is basically an image here that I've loaded into Blackboard. It's an image from your textbook. Okay? Here's what the image looks like. It's a sample chart of accounts. Every business has a chart of accounts. So this is just a sample. And what it does is it lays out our accounting formula and the various accounts that fall underneath each component of the formula. One thing to note up front here as you look at this, don't get overwhelmed, okay? You're not going to need all these accounts for chapter 1. What you're going to need for chapter 1, I'm going to just kind of circle them, are the accounts that we just identified in the first step where we actively read and then took notes of those 6 accounts. So let's find those 6 accounts right now. We already know that cash is an asset. Okay, well, another account that we saw was accounts receivable. Okay, that's an asset too. Now we can start to fill out those 6 accounts underneath the accounting formula on our note paper. But let's go through and circle the rest of the accounts that we know are in this problem, at least, in the upfront sentence. We have supplies and we also have equipment. Okay, great. Those are our 4 asset accounts. Okay. Now we also know we had an account called accounts payable. Now I know these two accounts right here are probably, I know that they're new for many of you. We're going to learn what they are over time by going through examples, by looking at business facts and using these accounts within a business context. For now, what I want you to know is that accounts receivable is an asset and accounts payable is a liability. Okay. Whenever you see that, you're going to learn over time as well. Whenever you see the word payable, it's going to be a liability. And if you kind of scroll through this list, you're going to see that word payable over and over again. Okay. All right. So that's our one liability account. And then we have in the upfront sentence, we have owner's capital. That's the only sort of equity piece that we have. Looking ahead, we're going to know that we have some expenses that we're going to hit. So you're going to want to come back to this chart of accounts when we get to step 2 of the problem. But for now, I want to pause and just say that we've identified our 6 accounts. We've got cash, accounts payable, supplies, equipment, accounts receivable up here, number 2. Accounts payable is here, the 5th one, and then we have capital. So let's go down to our drawing and fill this in, okay? So we've got accounts receivable. Now this is an abbreviation. A/R you'll often see as an abbreviation for accounts receivable. For note-taking purposes, you can certainly use this, okay? When we're actually filling out a problem, we're going to want to write out the full word, but for note purposes, you can do A/R. We know that we also have equipment and supplies, so let's write those in as well. These are your notes, so make them as neat or as sort of messy as you want. Do the note-taking that you know works for you. Okay, accounts payable. Again, we can abbreviate this for note-taking purposes, but as A/P. That's what account payable is. And then for capital is under equity. Okay, so this should be off to the side. Have this what we're looking at here, have this on a piece of notebook paper somewhere easily accessible for when we move into the next step of the problem. Okay? Now the next step of the problem is going to be filling out the opening amounts for this first sentence up here. Okay? So we want to come back to this piece and we want to actually understand where the cash, accounts receivable, supplies, etc. fall underneath the accounting formula. Now we've just done the work. We know that, and actually let me go to a new drawing which is clean. So we know that cash is an asset. We know that accounts receivable is an asset. We know that supplies is an asset. Equipment is an asset. Accounts payable is a liability. Owner's capital is owner's equity. So step 1, we have done here, okay? What we're going to do is we're going to eventually have to layer this into the homework software down here, okay? But what I want to encourage you to do is before you come down here to the software, and this is especially if you're having trouble with the table, okay, and I'm going to show this in the next video. What I'm going to encourage you to do is write out the logic that the table is asking you to do, okay? And we will go through that in the next video.